If you've been asking yourself this question, how many rental properties should I place in one limited liability company? In this video, I'm going to give you that answer. All right, let's get started. Okay, so it's not unusual to have this question come up from real estate investors. Maybe you're just getting started or you have many rental properties and you're now considering asset protection, which you should have been doing from the very outset. But nevertheless, here's the question that comes up all the time. How many LLCs do I need for my portfolio? Well, to answer that question, I first want to start with what I used to tell people, and then it'll help you draw conclusions as to the right structure for your particular type of investing. All right, so what am I referring to here? So 18 years ago, I would teach people that when it came to investing in property, what you would look at is the equity in the property. So say, all right, so let's assume that I have 3 rental properties. Now, if the 3 rental properties themselves had less than, $500,000 in equity, then I would suggest to an investor, well, why don't you take all 3 of those properties and place them in one LLC? And here's why. Because in this context, all right, the 3 properties, what we're trying to protect is the equity. What is your risk tolerance? Is $500,000 it? Maybe it was $300,000, but whatever that number is, that's what we're protecting against. Meaning that if a lawsuit were to originate with this house here, that somebody was injured, maybe a tree fell through the house during a windstorm and it injured the person that was sleeping in the master bedroom because the tree happened to strike them. So then the question becomes, what can they get? Well, that is what they bring in action against that LLC. It is all of the assets held by that limited liability company. So your total risk of loss is the equity in properties 1, 2, and 3. 3 being the entity or the property that created the harm. So you could lose all 3 of these. And then your total risk of loss was the amount of the equity in the property. Now, a lot of people gravitated towards that logic and they said that makes sense. My risk tolerance level is 500. For some people, maybe it was 250. But whatever it is, you would just kind of figure out how many properties you have, what the equity is in those properties, and then group them. But I also used to tell people this: do not place more than 5 properties per LLC, because then you're just increasing that overall risk exposure to unacceptable levels. Now, the problem with adopting that philosophy, which I later came to realize, is that it does not take into account why we invest in real estate. Most of us who invest in rental real estate, it's not strictly for appreciation. Although that's nice to have it, it's for income. So your investing strategy or your asset protection strategy for your investments should not be focused on the equity in the properties. Instead, it should be focused on preserving the income from the properties. And this is what so many people miss who talk about asset protection on the internet. They do not understand that the people who invest, like I do, like you do, for rental real estate, we're not doing it for equity. And I continue to hear this time and time again. People say, well, have 3 properties in there. You only have $350,000 in equity at risk. Hey, I don't need equity. You can't go to Costco and say, oh, I've got my equity book with me today and it's $249 for my groceries. Let me give you a little piece of equity, right? And rip off a piece of paper and say, you can redeem this when I sell the properties and get paid then. See, it doesn't feed you. Equity doesn't feed you. Income feeds you. Income changes your life. So for that reason, we want to protect the income. So my recommendation then, when it comes to LLCs for real estate, is to set up 1 LLC per property. All right, so if I had 2 properties, I would create 2 limited liability companies just like this. Now, before you start commenting down below, well, Clint, you're increasing the complexity of my life, right? The taxes are going to go up, meaning that the expenditures for my CPA, because we have to file now 2 tax returns for these LLCs. Stop, because that's not the case. When we set up these LLCs to hold these properties, each of these LLCs should be set up as a disregarded LLC, and that means it does not have to file a tax return. It's purely a name change. Set it up, put your property into it, and then you don't have to worry about it going forwards. It's going to be protected, and it's not going to add a cost onto you to set up the structure in this manner because no tax returns are being filed. Now, these LLCs that we create here, these separate LLCs, one per property, I receive questions all the time. Well, how many do I need? If I plan to invest and generate a portfolio of 47 properties, does that imply I need 47 LLCs? Not necessarily, although some of our clients have created upwards of 120, 130 limited liability companies. That's the extreme. I always think there should be a happy balance here. That is, when you've generated enough income that you know all your needs are met and your lifestyle, whatever changes you've made are taken care of, then you can afford to take on more risk and you can start grouping properties. So maybe for some of us, that's at 18 properties. For others, it might be at 10. Or for another person, it might be at 32. But whatever that is, when you hit that number, let's say mine was 10. After I get past 10 LLCs, like you see here, then on LLC number 11, this is LLC number 11, I might start doing this. I'll start putting 3 properties in an LLC. And then I might start focusing more on that equity strategy again. Unless I come across a property that has a tremendous amount of income, is just a little cash cow, then maybe again that goes back to a single LLC. And so breaking these LLCs up, one of the things we do with our clients is we're going to walk you through this analysis and determine how many LLCs do you need. And then if you're equivocating on, well, should I put these 2 in one versus only one property over in this LLC, then we're going to analyze the income that they're bringing in and think about grouping them based upon income and then looking at the risk factors associated with the types of properties they are, how old they are, the tenants and things of that nature in making that ultimate determination. So generally speaking, what this all boils down to is that if you're first starting out, definitely want to make sure you have the most protection because it only takes one lawsuit, all right? One lawsuit can wipe you out if you're a beginning investor. And so you're going to want to use a lot of protection. As you become more experienced and you have more assets, you can afford to take on more risk because one lawsuit, if you are using protection, doesn't have the same material impact in if the creditor is successful because you've isolated out your income and you've managed it as I just described. Guys, if you liked the video, be sure to hit the like button. If you're not yet a subscriber to my channel, now's your opportunity so you'll get notified every time I release a new video. Take care.